Welcome back to our channel. I'm Nate Lind, the online business broker. I sell companies like realtors sell homes. In today's video, we're going to discuss a crucial topic, how to value your company. If you're wondering how much to sell a business for or thinking about selling your business, you'll need to know how to value it accurately. If you price it too high, you're going to scare and get ghosted by buyers and you're not going to get any attention. They're going to think you're crazy. And if you list your business for too low, you're going to leave a ton of money on the table. You're going to be evaporating, just piss away money. So don't do either of those. You want to get your valuation right on the dot, right on the number. So I'm going to help you do that. There's many ways to value a business. Both public companies and private companies have different methods. For the intent of this video, we're going to focus on privately owned companies, not publicly traded companies. And they're going to have revenue between $1 million and $150 million per year. The first way you'll go about doing this probably is what started your journey to come here, is doing it yourself, DIY. I'll show you how to assess your business the way that a professional will do it. We'll look at cash flow, how you run the business, the types of risks that buyers assess when they evaluate it. Trying to do it yourself is very hard because there's no public record of sales, so you can't get comps. So with not having any records of sales, you won't be able to compare your company to others. But this should give you a good starting point. And if you want to schedule a call with me to verify your assumptions or your valuation, I'd be happy to help you. That's what I do. And I can help guide you quickly. We're going to come back to the DIY method here in a little bit. I'm going to go into the next couple of methods. The broker's opinion, that's what I do. Very similar to as in real estate, there are brokers like myself who will review the business financials, review the operations, compare those to other companies that are for sale right now. And after reviewing the companies together, or the comps, I can estimate a trading range. This takes me about 45 minutes in a phone call with you to get some of the information, gather up your financials, and then to assess those intangibles and tangible aspects of the business that are critical to this part. You can click on the link below in the description to book a call with me. Be happy to do that for you. The third method for valuing a business is with an appraisal. Again, this is kind of like real estate. That's why I love talking about how I sell companies like realtors sell homes. A lot of these methods are very similar. The appraisal, it's the most detailed form of a business valuation. A complete appraisal looks at every aspect of the business. It's very thorough. It documents the methodology and the assumptions that's being used to arrive at the value of the business and in its conclusion. This is also the level of valuation you need if you ever expect or there's a potential for a challenge on the valuation or a dispute that could end up in court, like a partnership split, a divorce, or if there's a buyer who's using bank financing, they're trying to leverage money to acquire a business. I use these when we have buyers who are needing financing. To arrive at the estimation of value, here's some things that a broker or appraiser will review. Your financial statements. This would include your income statements, your balance sheets, inventory reports if you hold inventory, or if you're a B2B business and you have business clients, a client report over the past 2 to 5 years for all of those documents. We'll also identify your income in your income statements and balance sheet adjustments that are needed. So we'll go through this analysis process where we're trying to maximize your business value by looking at any discretionary spending that you're doing in your business that maybe the buyer is not going to need for producing the same level of revenue later on. We're going to review the business operation. I'm going to try to understand more about the economic and industry data and metrics that are specific to your sector. And we'll compare that to other market transactions of a similar size and a similar sector. So we're going to go through a couple of those things. The valuation will also consider some additional factors. The capital structure of the business, the prospects for its future earnings, like where is it going? Is it growing? Is it staying steady? Is it starting to go down? Also going to understand the market value of the physical assets that it has. Do you have any equipment? Is there inventory, for instance, or some of the things that we need to look at and to assess? You might be wondering, which valuation methodology should you use if you go down the DIY path, or what are the valuation methodologies that the professionals like myself and appraisers are using? We focus on an earnings multiple analysis and then layer on a comparable company analysis. So I use two different types of methodologies to get to this. I'm going to look at how much you're making and then compare your company to the other transactions like this that are selling. Because that's how we value almost all of the businesses that we list for sale at Website Closers. We've listed over 3,000 businesses over the 13 years that we've been around. We're on the Inc. 500 multiple years in a row doing this. We're great at doing this. This is our specialty. And this is just how it works. You can get into a variety of geeky and nerdy ways to look at methodologies for business valuations. There's a ton of videos out there where people are doing that for earnings, PE ratios, and that sort of stuff for publicly traded companies. But if you're an entrepreneur and you're privately held, you're not going to value using any of those methodologies. This is how you're going to do it if you go to a broker or you talk to an appraiser. This is just how the industry values small businesses and lower middle market businesses between that $1 million and $150 million range. The earnings multiple analysis method uses what's called seller's discretionary earnings. It's the net earnings that includes all the financial benefits to you, the owner, if that's who you are. And then it's multiplied by the comparable value multiple that represents cash flow, growth, the potential of the business, with also some factors figured in for the risk of the transaction as well. So we're going to take, let's say, $500,000 of net earnings and multiply that by a number that is your multiple for your business compared to your competitors in your industry. And that's how we're going to arrive at the business value. We're also going to get into, through this series, tips on how to increase your business's value. As you're watching this, look out for things that decrease your value and do the opposite. Think about if there's a risk factor that I point out here in a little bit, how you can mitigate that risk, how you can remove that risk. And I'll get into those examples as we're going through this. Because your valuation is much more than just a number that serves the needs of a lender or a buyer. It can also be a really critical tool for you to support your growth plans. Doing a business valuation is something every business owner should do, whether they're looking at selling their business or not. It's going to let you know what your business is worth right now. And it's also going to tell you what do you need to do to double, triple, or quadruple that in the future. We'll get into some more details about increasing your value as we go through this. Here's a couple of teasers of what you can expect. Grow your profit and your revenue. Focus on profit first. In the lower middle market small business, businesses are sold on the earnings, not the revenue. I can't stress that enough. Businesses are sold on earnings, your profit, not your revenue. So the more profit you have, the more your business is worth. If you have a business that is selling $100 million and it's making zero, it's worth not a whole lot in this space. There may be some very select strategics that find some value in it, but the myth that your gross revenue is and the growth of your gross revenue is the most important part of your business is more for publicly traded companies than privately traded companies or privately held companies. Improve your social media presence. Improve your online reputation. Make sure that your customers love your service. Make sure they rave about you on the internet. Buyers will research you. They will Google your company's name, your name. They will look to see what do people say about it. And if there's more people saying bad things about it than good things about it, they may never even respond to you again. They just ghost you and move on. Streamline your operations to reduce costs and increase your efficiencies. If you're making more profit, you are worth more money. I promise you that. That is never a bad piece of advice. Make more profit, make yourself worth more money. Diversify your income streams to reduce your reliancy on just a single source of revenue. If you're a business-to-business type of business, if you're serving other businesses and you've got one client, get more. If 100% of your revenue is dependent on one client, buyers are going to notice that. They're going to poke at that. If you're a wholesaler and all of your physical products, your tangible products are being sold to one distributor, get more. Like those are some easy ways. Shouldn't say easy. I'm sure they're tough, and I'm sure you've probably thought about it to get to this point. But that's low-hanging fruit that you should focus on. Let me put it that way. Implement systems and processes that make it easier for the business to be transitioned to the new owner. Make it easy to hand off it. Create standard operating procedures. Document your business processes. Delegate more things. Hire a management team. Hire a leadership team. But then again, we've sold a number of businesses that it's a one-man show. You don't have to have a huge team in order to sell a 3, 5, 10, 15, 20. I've sold $25 million businesses that it was 2 people. So it's definitely doable, but it would have helped. It would have helped us a lot if they'd had a bigger team and they'd had a management and leadership team associated with it. Maybe I could have got them 30 million instead of 25. Those are some of the things that'll come up as I'm out there hunting for buyers that will come up. There you have it. Value your online business accurately. It's critical for the success of the sale. Again, if you go out with a crazy price, buyers are going to laugh at you. They're never even going to respond to you. And then if you go out too low, you're leaving so much money on the table. Because unless there's a bidding war, which does happen from time to time, they're not going to increase the value and say, you only asked for $10 million, I'm going to give you 15. Or you only asked for $1 million, I'll give you 1.5. That only happens when the business is super sexy and there's a bunch of buyers. And that only happens when it's listed on the marketplace. That almost never happens when you're going public or when you're privately working directly with buyers. You can get more information about my book and how I talked about my exit and that of 20 some odd clients who have exited with me over the past couple of years. Working directly with a buyer is the first misstep you can make that most founders do. I did it myself, I'm ashamed to admit. So it's really important that you get your business valuation figured out first and right, and it depends on your situation. Are you just curious what your business is worth? Feel free to inquire here. Click on the link below in the description about how to get a valuation opinion from me, how to get a business valuation. You can send me a message. I'll do the valuation for you for free. It doesn't cost you any money. I do have a qualification. You need to be at least 2 years old and you need to be making more than $1 million a year. If you don't and you're not, continue watching these videos and I'll show you how you can do this yourself and where else you can get that valuation. And you're always still welcome to message me. I personally may not be able to do your business valuation, but one of my associates on my team may end up doing it for you. Send me a message. I'd be happy to recommend also my recommendations for business appraisals. So if you need to get an appraisal done, I can help you with that. And if you found this video helpful, please give me a thumbs up. I've been doing videos on YouTube for a long time now. There's a lot of folks that are watching that never hit a thumbs up. They never subscribe to my channel. About 90% of my views are people who aren't subscribed to me and may never hit the thumbs up. It means a lot to me. This takes a lot of time. I don't have to do this. I've got a great business as a business broker. I'm doing this content for people who I think are curious about this subject. And I find myself answering this stuff over and over and over again. So if you're a potential client or a prospect that I'm talking to and you're watching this video, thank you very much for watching to the end. Please get back in touch with me with whatever pieces are missing from your business valuation so I can finish that process up. And again, if you found this video helpful, hit the thumbs up, subscribe to my channel for more valuable content. And don't forget, if you've got any questions, leave it in the comment below. I've responded to every comment on my channel in the 2 years that I've been at this. So if you want to get a hold of me, leave a comment, send me a message, and we'll see you in the next video.